Good morning, good afternoon, and good evening to all my viewers watching this video, especially to all my subscribers. Our topic for today is head and shoulder pattern. What is head and shoulder? When you will use the pattern in your trading journey, where you will find the pattern, how it will protect your money and maximize your gain. The pattern is happen in the uptrend and weakens and reverses its directions. The pattern is developed over the period of time. It creates a left shoulder, right shoulder, and a head on the middle. Left shoulder and right shoulder have almost at the same height. Neckline was developed and served as a support line, and the volume is the highest on the left shoulder, then the head, and then the right shoulder. This is the classic example of the head and shoulder pattern, wherein the trend line is drawn in the uptrend, left and right shoulder and the head as shown, and the neckline is drawn in the lowest point of the two shoulder. Before we continue, please don't forget to press like, share, and subscribe my YouTube channel, and also please press the bell to notify you to my next video. The uptrend was continuing as expected when it peaked at the left shoulder, and then the retracement happened, taking support of the trend line and bounces up. The volume is evident high compared to the head and the right shoulder. The head may not be as high as shown in the illustration, depending on the weakening of the trend. If you see a lessening of volume on the rise of the head, as compared to the volume rising to the left shoulder, this might need you to watch out for possible change in the market trend. Then, the decline from the head breaks down through the trend line and also falls below the level of the peak of the left shoulder. There is a weak rally to the right shoulder with a lighter volume. The right shoulder height didn't reach the head and almost at the same height of the left shoulder. And then the price is now trading in the sideways and the neckline was formed and serves as a support level. Neckline is a line joining the dips between the two shoulders. The right shoulder was formed and fall to a low point lower than the previous and penetrate to the support line called the neckline. Change of direction was now need to observe. The volume increases as the downtrend strengthens. From the drop of the right shoulder and passing to the neckline, which serves as a support, if the price is trying to return in the neckline will now serve as a resistance. And when it bounces down, a strong downtrend is evident. In some cases, as the volume is increasing during the drop, the price may not even return to the neckline level and goes down and form a downtrend line. This is the classic head and shoulder pattern in the uptrend. Left shoulder was created and continue going up until created the head. If you will notice in the expanded view, when the head is created, the volume becomes weak until it goes down, trying to retrace and create right shoulder, but it is still a weak rally of bull until it continue going down and break the trend line of support. The head and shoulder pattern is busted when the price is trying to break the neckline and succeeded and continue passing the resistance level line created by the two shoulder. A strong comeback of uptrend if the price passes high the head and return to the trend line. In that cases, the head and shoulder reversal pattern is not valid or succeeded. Inverted head and shoulders occurs when the downtrend reverses into an uptrend, and it is basically the reverse position of the head and shoulders pattern. Again, there are 3 points to the pattern, with the middle one, the head, being lower than the shoulders. The neckline is drawn across the two peaks between the low points. The volume of trading is important in validating the pattern as an effective inverse head and shoulders. The volume should increase rising up when the price breaks through the neckline. The final bull move must also show significant volume strength to confirm the power of the price's new directions. This is the example of the inverted head and shoulder, wherein the price is trying to penetrate the neckline resistance and it succeeded and passes the resistance. When the bear is trying to return down, the previous resistance, which is now become a support, bounces on it and started going up. This is the illustration of the busted pattern of inverted head and shoulder, wherein the price continue going down. And then the pattern become void and not succeeded. Now, I hope you understand how to spot and use the head and shoulder pattern. Thank you for watching. Till my next video. Bye.